Hey guys, we're checking back in on gold today. Yesterday we had a bull break of REQ. Today we had a bear break of REQ. And in both cases, we didn't have any follow through. So when we have a reaction to key levels that don't have follow through, usually that means it goes in the opposite directions. But we've had two of those cases now back to back where we didn't get any follow through. So when you get that sort of situation, you have to take a moment and step back and be objective with your technical analysis and say, okay, obviously, we thought we were in an EQ pattern. All the elements were there, but we didn't see the behavior that we wanted in either direction. So you need to be able to take that objectivity and say, maybe you made a mistake. What can we make out from this? What's actually happening? So in this case, let's ignore the fact that we had this perfect, picture-perfect EQ until we broke the upper and lower ranges of those EQ without any follow-through, and in both cases, on pretty good volume. So what I'm going to do now is I'm just going to pay more attention to these two limitations. So we have a resistance up at 1316 that has proven to be a major area of resistance. We also have a support area down at 1302. So these have both confirmed, so you can treat this as a sideways channel, which I'm certainly going to do. But you can also play a little bit with trend lines and see what you can find out. Now there's a huge danger in doing this because often you can convince yourself that your trend line fits, and you can make any trend line almost fit and happen to see things line up in certain cases. So in this upper trend line here, our resistance, I've connected a couple of our green candlesticks. I've got one over here and one over here, and it generally works out okay. I got a nice touch on 1314, some resistance through here. We are discounting the fact that we have this big upper wick, and if we travel back into this area, we can see that resistance, access support over here, and resistance over here. So you know, you can toggle with this, play around with it. Lots of times you can convince yourself of your bias. So you need to be very careful with these trend lines. But I'm comfortable with this trend line, and it seems to be following this slight downtrend, still allowing us to stay in this overall sideways channel. So I'm going to keep that in play. And if I go and try and draw something on the bottom, I just tinker around, see if I can see anything that makes sense. I don't see anything in this particular setup that really fits the bill for me. I got one minor touch here. I even got the wrong candle, so there's a minor touch there. I don't know. I'm not very confident in the support line. I would keep it on there just to watch and see if we continue a tightening range. Maybe our 4-hour EQ is actually a long-term hourly pennant, and we'll go take it from there, basically. So, summary, a lot of unknowns today. We didn't get the breakouts in the directions that we thought we might. We need to take a reassessment, readjust our perspective, get a fresh take on things. I'm still going to be watching 1316 as my resistance, 1302, and I want to start playing around with this hourly tightening range, see if we continue to stay inside this. If we don't, we happen to break out, test 1316 again and get rejected from it, we know that we learned a lesson, we need to adjust. Technical analysis is as much art, probably more art, than it is a science. We need to constantly check our bias, we need to review our charts, we need to be open to the fact that we do make mistakes, and we need to adjust our trend lines always until they are proven more concrete and effective. And that's the takeaway for today. We'll watch this tightening range, potential tightening range into tomorrow, and we'll be watching these 1316, 1302 key levels. Thanks, guys.